In my video last week, I made this prediction. Well, you can see that the bottom confirmation is still increasing here, but the price on Friday, the S&P 500, pulled back on Friday. Now, what's happening with the risk confidence level? It's falling. Not only is it falling, it's now negative. So what this tells me is that we're still in for further softening. We could see a downward move or a continued flatness to softening next week. And you can see since the close on Friday, February 16th, which is right about here or so, a little hard to spot on this chart, but you can see that since then, the market did exactly that. It has pulled back until Nvidia posted stellar earnings and revenue growth. And you can see that the markets took off. So that prediction was correct. The market softened and in fact dropped until today when it shot up. And we'll see if this continues into tomorrow, Friday. Here's yet another case of, quote, investors trying to get too cute by selling their profitable positions in Nvidia leading up to the earnings announcement on Wednesday after the market close, only to see the stock go up 16.4% today. And by the way, it's still going higher in the aftermarket. So those folks that sold must be kind of wishing they hadn't. I'm going to make this a quick market review video today, Thursday, instead of after the market close tomorrow on Friday, because I'm taking a trip up to Boston starting early tomorrow morning, Friday morning, and I'm not going to have much time over the weekend to produce my normal video. So let's jump into it and take a look at how the equity, bond, gold, and crypto markets are looking right now. So as we already discussed, you can see how the market sort of softened into Friday on the 16th here, and then it took a dive on Monday, Tuesday, Wednesday, and then today, finally, Thursday. I'm looking at ARK here, but you can see the overall market here. Things really popped today and went quite a bit higher. So this was a very good move upward today. And if we look back over the past month, we have a fairly healthy situation here. You can see that ARK has been struggling, the highest risk basket of stocks, but you can see the NASDAQ is just behind the S&P 500. So we have a somewhat healthy risk appetite, but it's not stellar. And if we look back year to date, now that's not much more than a month, but I think it's valuable. You can see that ARK pulled way back, small caps pulled way back, but the NASDAQ has led this pack higher. This is a good risk appetite. I'd like to see ARK and small caps come up and surpass the Dow and S&P, but this is starting to look reasonably positive. And if we look back over the past year, we can see you've had one heck of a year if you've been in the NASDAQ, up 47.59%. And the ARK Invest is up very nicely. S&P's up very nicely. The Dow, even the Dow's up very nicely. The small caps have really been kind of lagging. And if we look at bottom dynamics, well, wow. You can see the price shot up today. The markets were up very nicely today. This bottom confirmation indicator is moving higher, while the bottom forming indicator is moving lower. And the fact that the price is moving up, the bottom confirmation level is moving up, and the confidence level is moving up, tells me we're likely to go higher. Now, that's going to be somewhat in conflict with some of the other things I'm going to show you, but that's what this is telling me right now. So I'm hoping that tomorrow on Friday we have a very nice stellar up day. We'll have to wait and see. This is part of what gives me some pause. In fact, when I talked about this last week, I said, yeah, I'm not really concerned until this starts getting up towards 60. Well, look where it is. It has just shot up the last couple of days. It's touching 60, and the risk level starting to come off the bottom here and move higher. This really gives me some pause. And unless the markets move higher and this turns around, we could be in for a tough ride over the next few weeks. Now, the one savior here is the opportunity level is continuing to move higher. Not only that, but on this big update, it accelerated higher. So maybe this isn't so bad, but it just gives me a little concern here based on what I'm seeing. And let's take a look at equity versus safety, because this gives us a pretty good picture of what's going on. And I'm just going to jump into the markups here. But you can see that the NASDAQ, over the past 7 weeks, it really shot up into first place. And now it's just been kind of slowly declining. And small caps, which were not doing well at all, you can see they were ranked 10th back here, have steadily moved up and are now in second place. Now, everything else has pretty much stayed put since last week. S&P 500 in first, the Dow in fourth, cash staying right here, short-term treasuries here, intermediates here, gold here, 20-year bonds here, and very long-duration bonds down here. So unhealthy treasury market and a somewhat healthy equity market. And look, I don't think the equity markets are really going to blast off until it becomes clearer that the Fed's going to start lowering rates. And let's just take a look at that treasury market, and you can see what's happened here. When equities were really not in a good place, cash was up here in first place, and short-term treasuries were here. And ever since 7 weeks ago, we have not been in a good situation with treasuries. You want the long-duration treasuries like EDV and TLT to be ahead of intermediate, short-term, and cash. Well, we have exactly the opposite situation today, and it's been in that situation pretty much except for this day right here, where EDV was ahead of TLT and intermediate treasuries. That was starting to look healthy, and then it just collapsed again. So unhealthy risk appetite for treasuries. And again, this may take the Fed kind of indicating they're willing to soften on rates before these start to take off and go up again. But boy, when they do, EDV is going to be a great place to be. And what about the buying and selling pressure? Well, I see signs of optimism here. Now, that could turn around very quickly, but you can see we've, in general, had a nice upward price move. But I also talked about the fact that the buying pressure, this solid gray line, was in divergence with that. You can see the buying pressure has been decreasing while the price was going up. Now, we had a nice upward move today, and you can see that the buying pressure really shot up here. Same thing for the S&P 500. Divergence, but a nice upward move today and a nice swing higher for the buying pressure. NASDAQ 100, very similar picture. Divergence again, and a very nice upward move here, but it's not above the selling pressure yet. And then if we look at ARK, this is a very similar picture, right? Selling pressure increasing as of late, buying pressure decreasing as of late, but again, starting to move higher with the buying pressure as the price goes up. So this looks promising. And if we look at small caps, very similar picture. You can see that the buying pressure has been sort of on a mild decline since back here, but today it really shot up as the price moved higher. So hopefully this continues into tomorrow and into next week. We'll see. What about sector rankings? Well, as you know by now, if you've been watching my videos, these move very slowly. So these kind of tell you where things were. In fact, if you look at this, even if we look at this week, this bottom table, you can see that treasuries look like they're in a healthy relationship here, and we know they're not. So this is old data. This is not telling you kind of where we are currently. What I don't like about this is that consumer staples are ahead of consumer discretionary, but you can see that cash is way down here. So let's skip ahead and look at the sector rank accelerations, which kind of move more quickly, tell you where things are headed. And this paints a very different picture. And it also tells us why the risk acceleration has moved up so dramatically. And you can see that's because cash has gone from down here to up here, and treasuries have moved up right across the board. So that's driving that risk acceleration higher. And you can see also that consumer discretionary plummeted down to here, and consumer staples moved up to here. That's also not helping that situation. So, if you ignore all that, you still got, you had the Qs up here, technology up here last week, but you can see it's fallen down to here. where's ARK Innovation? Right at the bottom. This is looking like a fairly unhealthy risk appetite. And you can see the Dow Jones Industrial Average moved from here up to here. This is a flight to safer equities, just like what you're seeing here with consumer staples, which moved from here up to here. So some cause for concern here. And what about treasuries? Well, you can see what I was talking about here. They are not in a healthy relationship. You've got the longest duration, riskiest treasuries down here, finishing last, and then you go up to the shortest duration. You want this to be inverted the other way, and this is not looking good for treasuries. And if you look back over the last month, again, it tried to rally back here. This was really healthy to this point, and then it just collapsed. And you can see that we're in an unhealthy situation now. Year to date, again, unhealthy. Longest duration down here at the bottom. And, and as I said earlier, we might have to wait for the Fed to indicate they're going to soften on rates before you start to see these move up. But I'll tell you, when these move up, you will typically, especially these two, will move up a lot. And then if we look at the 1 year situation, you can see where we are. We had a really awful sell-off down here into the bottom back in October, November of 2023, and then things really took off. This was a nice rally, and if you were in these bonds, you were feeling like you were in equities. But then the sell-off started again. I don't think it'll get back to this level. I hope not. There's really no guarantees and no way to tell. But my hope is that these start to turn around and head higher soon. And what about the buying and selling pressure? Well, this is interesting. This is an interesting story. You can see that for short duration and intermediate duration treasuries, the selling pressure has been increasing. Not only is it increasing, it shot higher today. You can see that here. And the same with intermediate treasuries. Price declining, selling pressure going higher. Well, what about what I call intermediate to long? These are a little bit longer, 7 to 10 year treasuries. You can see that the buying pressure is increasing and shot higher today, even though the price was kind of flat. Now, if we go to long bonds, 20 year treasuries, the price actually increased. I know that's not a large looking increase, but look at what the buying pressure did. It really kind of shot up here. So maybe this is the beginning of investors starting to recognize that these are pretty much in bargain territory here, and they're starting to buy into them. Hopefully this will continue going forward. And what about the inverted yield curve? Well, boy, if you look at this, the blue line, the dark blue line is today, the red line is a month ago, and the light blue line is a year ago. So you can see that relative to a month ago, certainly at the 2 year toward the short end, interest rates are a lot higher than they were just a month ago. And they're starting to approach how high they were a year ago. And at the long end, they're kind of sitting put. At the long end, they're kind of staying put, and there's not much difference here. So I don't like this. I'd like to see, once the Fed starts lowering, obviously at the short end down here, these will come down, crashing down, and these won't move down a whole lot, and you'll get uninverted. And where are we right now? Well, we're 35 basis points inverted. That's probably around where we were last time I did one of these videos. It hasn't moved a whole lot. And what's the Fed rate monitoring tool telling us? Well, the Fed rate monitoring tool is really telling us that the markets don't believe the Fed's going to lower rates anytime really soon. In fact, you see that here for March. 96% confidence that rates stay exactly where they are. You go out to May, it only drops to 71%. Go out to June, it's only down to 32%, but now at least there's a almost 52% likelihood that they'll drop by 1/4% by then. And you keep going out, and these get better on the lower end. So 1/4%, 0.5%, and 0.75% decline potential here. But what's interesting about this is usually before, when I would get out here to July or September, this blue line was gone. It's persistent now. So the markets really don't think the Fed's going to lower until later in the year. And that's really showing up here. If you look at some of the older ones, some of my older videos where I go through this, you get out here to July, and this line's either almost at zero or gone. So the Sentiment of the market has really shifted here. And what about gold? Well, gold has been trying to rally lately, and you can see that the selling pressure really spiked up here as the price plummeted, and now the selling pressure is dropping, buying pressure is increasing, and the price is going up. No way to know where this is going to go. And what about Bitcoin? Well, Bitcoin has been just stellar, and you can see that the buying pressure bottomed out down here. Remember, everybody sold on the news back here when the ETFs were approved, and the price, of course, dropped because of the selling, and then it turned around and went higher, and it's quite a bit higher than where they sold back here. So hope they were smart enough to get back in. But you can see that the buying pressure bottomed out here and has been moving higher. Now, it's kind of flattened here, but it's still well above the selling pressure, and it's pointing higher as the price moved up today. Now, this is kind of flat top, so we'll see where this goes going forward. Investments and investing aren't that complicated if you know how to allocate your portfolio without destroying your returns and getting little to no protection from downside risks. As an investor, you need to take the long view and allocate according to your risk tolerance, rather than fretting about what's currently happening in the world or what everybody else is doing that you read about in the media with their portfolios. If you want to be a better investor, I discuss how to allocate your portfolios in 2 key videos linked in the pinned comments below, titled The Ideal Portfolio Using Just 2 ETFs or Mutual Funds, and The Ideal Portfolio Using Individual Equities. Again, link in the pinned comments. Until next week, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
Stay up all night, gotta work now. Make up my mind and it turns around. Say that I'm fine till I burn out. Thinking this money sounded so nice. Ambush here in the strobe lights. Pay anything for the high price. This life feels like the sunny water. Wet my lips, but the sun is stronger. Pour it out, if I'm being honest. It's just not everything you promised. Running out, drying out, what did you say? What did you say when I told you? Maybe this wrist wasn't gold proof. Packing my bags like it's all true. Hard to make friends when I'm focused on all these bars that I'm holding. I like the cold, but it's lonely, yeah. This life feels like the sunny water.